Tesla actually delivered. So welcome everybody. My name is Michael Camone, Director of Content for T3 Live. I'm here with David Prince to help me make sense of Tesla. Obviously, it's the talk of the town today. It's up huge, and we need to get the story from the man himself. And if you want to work with David, go to t3live.com/DP. You can see right on the screen. Somebody said today, great focus on Tesla. Thank you. So, David, again, Tesla's the big story today. The stock's skyrocketing after Q2 deliveries came in strong. You took a quick short this morning and you covered fast, which is a good thing because it went up something like 12 from there. So just very quickly, so Tesla's actually 64% off the lows in just a few months. So what are you thinking with Tesla here? What are you telling people in Inner Circle?
Sure. So what I think in a nutshell is Tesla is somewhat a function of the market, which means there wasn't a lot of meat left on the bone. And if deliveries were within reason, meaning not far below expectations, and China wasn't any more disastrous than people thought, there was a lot of meat on the bone left in a stock like Tesla, whose all-time highs were well above 300. And then you kind of look back and you realize that although maybe the AI story has calmed down for a week or so with NVIDIA, I don't want to say faltering, but taking a break, that there is all this excitement over self-driving and Tesla's big AI machine. I forget what it's called. So there's enough there. And then the power story, which they announced like huge numbers on the power side today, that when people eventually, especially fund managers, get sick of buying NVIDIA every day, don't really feel like, chasing Apple at 220, not that it doesn't look good today, but they don't feel like buying more of it. And they see that small caps still aren't working. They don't see a lot of big cap reliable companies that sit on a decent amount of cash run by, who's our Thomas Edison of this generation. There's not a lot of those left. So all it needed was not bad numbers and maybe even something better than expectations. And it ignited, and a lot of it's about the chart through the 200-day for the first time. And God knows how many months, 205s yesterday. So there was a strong hint. Stocks a lot of times tell us what might be happening, right? They tell a story pre the actual story. And then, of course, today, the news backed up the story that things aren't quite as bad as the stock originally had predicted. Wouldn't be shocked if it takes a little rest up here. In fact, I went back to it at 231 and I said, listen, if you look at the weekly chart, you can kind of see where it might take a break right at 231. I don't profess to be an expert chartist, but I can read them pretty well. So 231 was a spot a bunch of people got short at, and did another cute short. There are a lot of people long and long-term portfolios, and I'm happy for them. It looks fantastic. Wouldn't go out and buy it first today. It has to absorb some of these moves. And 231 might be a little bit of resistance. And thereafter, I see a move basically to 240 to fill another weekly gap. So maybe we'll pull back, towards today's lows at some point over the next few days, which would probably give bulls a buying opportunity. But in short, you had really solid numbers in a company that was really not expecting solid numbers. You had China no worse than what were already dire expectations. You have the self-driving story. You have the AI story. You have a market that is at all-time highs with a lot of stocks that have just gone straight up. There wasn't a lot of big cap story stocks left with a brand name CEO. This was it. So it makes total sense to me that it finally went.
Okay, so earlier in the year, I believe it was March, where you said Micron would sort of be re-rated as an AI play. Now, it seems like Elon Musk is trying to...
I got to do one thing. I apologize. Guys, I'm trimming some of these Q puts because obviously the market just came in a great deal. So I'm trimming some of these Q puts right now as we speak. Sorry about that.
Okay, no problem. So David was actually just talking to Inner Circle a little while ago. He put on Q puts and he just gave the yell to take profits. Okay, so David, circling back to Tesla, do you think it will be sort of re-rated as an AI story because Elon Musk has sort of like jammed that AI attachment to Tesla? Do you think that could happen here?
I think it already has been to some degree. If you look at how dire the news was, we didn't get rate cuts, and this wasn't about deliveries anymore. It was about an actual slowdown, and it was about competition beating them in China. So I'm just going to be straight. The fact that it never went below that 140 area, right, and retested the 100 lows kind of told you that there was more to the story. If it was really ever going to be just an automotive story, it would have gone back to 100. So I just, as an older guy who doesn't drink the Kool-Aid, to some degree, that's already there. Now, I think the question is, will it become the hot part of the story? In other words, can people look past that maybe Teslas are, imploding in the secondary market, that in order to get demand up again, they really have to lower pricing, that yields are compressing because pricing's going down. Can they look past that and look at it as an AI story? Yes, but not, in my opinion, not to take it to all-time highs. We'd have to really get a bunch of rate cuts for that to happen. But it can be a bigger part of the story. I already think it was part of the story, or else I think it would have bottomed well below where it did near 150.
Okay, let's move on to another one of our good friends, Amazon. So this has been a long-time favorite for you this year. You reloaded stock and calls on Friday. You sold some into strength this week. Let's talk. I guess let's put it in your language. Meat on the bone. How much meat on the bone is left with Amazon?
Okay, well, look back the last 3 years, and if you were to look at the chart of this versus its cousins and brothers and sisters, namely Meta and Apple and Google and Microsoft, you'd see that really prior to this year, it was a disastrous performance for Amazon. Everything after COVID. And we had that huge move during COVID, and then it's really underperformed a great deal. But now you have serious cash flow, real profitability. They're throwing off more cash flow than they ever have in the history of the company. There was an item out by the Financial Times today that their European unit is actually a profitable venture now, which a lot of people didn't pay attention to. Their advertising business is now bona fide one of the biggest in the world. That's like an offshoot they just started a couple of years ago. And if you look at AWS, it seems like growth is back. So all-time highs were previously 188, then we went 191, and then we finally broke through and got to right in front of 200. Is there more meat on the bone? Yeah, this is easily 210, 220 in a market that doesn't correct too much, meaning I always explain we are a product of our environment, and if we're going to have a 10, 15% pullback in NASDAQ, it might be hard for Amazon to get there. But we got to turn down this track. But long story short, if the market just meanders, meaning doesn't pull back too much, goes back and forth, and picks its favorites every once in a while, then it's very easy for a company like Amazon that is hitting not on a few cylinders, but right now all cylinders, to get to I've always thought like 210, 220. There are some people out there who call this, a huge breakout. This is not an AI story. It's becoming an AI story more, right? But it's not a pure AI story. It's not a software story. It's only so profitable. You got to remember the type of company Amazon is and how many employees they have to have in order to run efficiently. So it can only go so high, in my opinion, because it's not going to have the type of profitability an NVIDIA would. But 210, 220 seems very realistic. And Friday, this has been the same exact market. Leading stocks give you these moments, whatever the reason, right? It's a downgrade, it's a rebalance, where everyone gets fearful that the story's over. We saw it with Apple during the rebalance. It's a 208. I was aggressive there. Then, well, you see where it is now. It hit a new high today. And then on Friday, after a 15-point move in a straight line, we pulled back to 192s. And there was, again, another rebalance. So I was like, the same story. Nothing's changed. It's just some people, there's some fear. Let's take advantage of it. Got aggressive with calls and stock. And I don't think it's over. But I do think the market is like a few minutes ago when we were ripping on the Qs. I said time to put on a hedge at the very least if you're long like me, or get offensively short because I think there'll be some money made. So you have to kind of I think it's a good time to have some hedges. I'm not that bullish the overall market.
Okay, all right. So, but back to Amazon specifically. Let's take off our trader hats for a second here. Do you think this is the type of stock people maybe should just leave it alone, just put it away and come back in 5-10 years?
5, 10 years? No, it's very rare that works anymore. If you really look back, but do I think it's a stock that can be bought on weakness and put away the next 3 or 4 years or 2 years? Absolutely. But I really do believe that the next big move, I don't think there's 20% in the Qs and NASDAQ to the upside over the short term. I think it's more like 10% before we continue higher. So if I'm not an investor in much long term on these big cap names up here, I don't think it's time. So direct answer, whether it be Amazon, Apple, I don't think it's a great spot to manage, to add to these with multi-trillion-dollar market caps for the next 2 years here. I think there are better investment opportunities, whether it be in biotech or IWM or some mid-cap names. These are like, I'm actually levered long in all these big cap names, and yet long term, the next 4 or 5 years, I don't think this is where you want to be at these prices. Maybe if there's a pullback like we got on Nvidia recently.
Okay, all right. Yeah, I think that's fair after the huge run in tech this year and last. Okay, let's go through one more recent name, and then we'll get into the more looking ahead, because we have a busy week and a half coming after the holiday. So Broadcom, ticker AVGO, you bought the dip on Thursday. Now, are you thinking, let's play the split, it'll do another Nvidia? Was that your thinking there?
No, I try and pretend I'm a little more intelligent than that. And because if you do just play like blindly, there's going to be a split, you get your ass handed to you, because quite frankly, since they announced the split, the stock's gone down 250 points. So a little bit more thought there. I thought, okay, Broadcom was re-rated, notoriously non-expensive stock, trades 20 times earnings, 25 times earnings, got re-rated off the AI story because it's one of the few names outside of NVIDIA that has real AI revenue that they break out for you and tell you. Okay, so now that we know all that, the stock gets re-rated, goes up to 1850, announces a split like they should do, right? It helps for employees that want to buy stock, helps for the retail investor. But the stock then loses literally 275 points or so. And the chart is a bit precarious, meaning there's some room to the downside. And the 21-day, which is still a very bullish average, when I got involved, was all the way down at 1530. And I looked at this market, and if you look, it was like 5-6 red candles in a row, and thought, okay, we are in a very bullish environment, one of the more bullish we've seen in decades. Are they just going to take it all the way to 1530 and make this easy for me? Is there a lot I'm excited to invest in? No, this is one of those few moments. Here's a company I can trade and invest in at this price. If it goes lower, I'm looking forward to adding. If it goes all the way down to 1530, but at 1575, I can't be perfect. I got to own this. So sure enough, we owned it. We saw a rally in a few stocks like NVIDIA off that correction. And then even more than NVIDIA, we saw a strong rally in Broadcom. And I actually exited because it came into some resistance near 1650, 1660 yesterday. So at about 1647, to be pretty correct, is where I exited the trade yesterday. Because I also, again, light volume week, holiday, I had quite a few positions on. I was up about 70 points, in about a week or 4 or 5 days. And I thought it's probably a good spot to get out, and I'll get opportunity. So exited the trade yesterday.
Okay. Yes. Okay. So you talked about maybe that some of these, big cap tech names, at least on an intermediate to long-term basis, might be a little stretched, or at least not the best setup. So
Broadcom, right, is trading now at about a 70% premium to its average multiple. Now, there's a good reason, because of this AI theme that is not just a theme, it's a very real business. But you do have to understand there's been a whole group of stocks re-rated. The question is, how long do they get re-rated and how much higher? There might be a break in between. And if there is, I'll be a buyer. Sorry to interrupt. I just wanted to explain that.
No, it's okay. Because I actually think we should go down that road, because so if we look back at market history, everything that looked like a permanent secular trend turned out to be cyclical, whether it was like, internet stuff, China, et cetera. Even, we could even go to like cannabis was in cycle. So it's like, yeah. So the question is, and I ask this to everybody, and but is AI truly secular, or is it going to have like big? Because basically, if you look at analyst estimates, everybody's projecting the straight line growth forever. Like, do you have any
Yeah,
idea of how long it can
no,
last?
I think even the most bullish analysts on AI would clearly say we are at the start of things, and the double ordering, the triple ordering, the catching up, the countries that are getting involved in AI because they feel like they're behind. We understand that's not about to disappear, but there'll be like lulls where after these monster moves. By the way, I'm having an allergy attack, so I'm trying not to sneeze on air. But what I'm seeing is that we could have like a year or two and then like a little lull where people are like, all right, we have to monetize all these chips we've bought, and maybe that'll take a little bit longer, and then they'll be ordering again. So there will be a bit of cyclicality till everyone can figure out how can they actually get a return on their investment, because a lot of people are playing catch up without understanding how the ROI is going to be, right? How long it'll take, what they're going to actually use it for. So I would say AI is more immune than any other trend there is, hands down. And it is a real thing that is in its early stages. But certain companies may slow their ordering down and spending down till they figure out, especially if investors demand, hey, you did all this buying, what are you doing with it? So cyclicality will come in. It'll just be, let's say, safer, right? And more immune to it than almost any other area in the market.
Okay. So let's circle back because we need to look forward. So tomorrow we have the ADP. Friday we have non-farm payrolls. Next week we have CPI, PPI, a whole bunch of international inflation reports, and then bank earnings. So how are you positioning for the next couple of weeks?
A little lighter, but I keep getting aggressive so I was on the Spaces. It was a fun one. There are a few guys that I enjoyed that really spoke my language. And what it was look underneath the surface. Just keep going under the surface. Worry a little bit less about indices. If you want alpha, it's going to come from individual equities. So this is how I'm playing it. Oh, NVIDIA correction, down 3 days in a row. A bit oversold into previous all-time highs, which matched up at 115. I see 118s and 117s in the trading market, and then after hours it gets to 115. I'm an aggressive buyer there because I do not believe that we're going straight down to fill a gap down at the 107 area that a lot of people were talking about. So I'm going to buy it, and I'm foresee a strong bounce to 124, best case 129, 130 before we maybe continue lower. And that creates alpha and, frankly, a really large percentage move, right? In dollars, almost like a 8% gain in like a 48-hour period. Buy NVIDIA. Trim a lot or most 124s, and then trim the rest of it and hold the trailer 128, 129. Okay, move on. Broadcom. Broadcom pulls back. Ooh, off 250 points. I see an opportunity here. Although I don't like the market, I think this stock can offer me some alpha, maybe make 3-5%. Oh, wait, Chipotle, another leader that just announced a huge split, and maybe the float is much more heavy than people are accustomed to after a 50-for-1 split. So we pull back the equivalent of almost 500 points pre-split and 10 points post-split into prior highs, 60, an area you can identify as what potentially should be a strong support now. Good numbers, and we don't have earnings for a few weeks. I think this is a tradable and an investable idea here. 60 to 61, buy it. Rallies to 62s, trim some. That I'm just in short order telling you that's where I see we are, right? Amazon, they want to sell it. They want to sell it to me at 193 on Friday, and then I see 198. These are alpha moves that can pay you for the day, for the week, and the year. That's how I'm positioning myself. And then when we get these big moves in the Qs, when the Qs were up 50, 60 earlier, I bought the 480 puts for next week. And I thought, you know what? They're either going to zero, which I don't think they will, because I actually think we're going to have some volatility. We have a big number. Tomorrow we have ADP, then we have Friday, NFP. And in the meantime, it acts as a hedge. So if I want to not sell all my Amazon, which I don't, the market pulls back, I'll get paid. So I really think it's a time to look underneath the hood and not overly focus on things. In fact, IWM looked awful yesterday because TLT was as ugly as could be. Yields were popping and everyone was selling IWM. And I thought, you know what? We might get some soft economic numbers this week. At 201, I like the risk reward here. I bought some calls. I bought some stock. And guess what? At 202 today, I said, you know what? It's IWM. It's the small caps. They're not exactly everyone's favorite area to invest in. I'm up. Who the hell makes money in small caps? Let me take some profits. So underneath the hood, not SPY and QQQs. And I think you can do just fine in this market. So we get what, in my opinion, is a needed correction.
Okay, all right. So I'm glad you brought up IWM because I have a question about IWM and XBI because you also brought up biotech before. Now, it does feel like everybody is waiting for lower rates or a clear signal. Now, do you think people need to be in these before that happens?
Yeah, I think it'll be too late. I think investors get paid, they go through the pain, and then there's going to be a period of time, kind of like we saw November, December of 23, right? We're in a straight line. Like we saw IWM, I think, go up, don't quote me, but it was like 30% in like 4 or 5 weeks. We saw XBI 50%. I think that's what's going to happen, right? I think it's going to frustrate everyone, take out a lot of the non-investors, the people who are not loyal, the people who are not believers. And then when it finally moves, whatever the catalyst is, right? It's just going to happen. And I don't think it's going to wait. And I think we've seen some of this. Look what just happened to Tesla, right? The people who've been willing to be investors and go through the frustration, it's kind of been a straight line of recent, right? I was a pretty big buyer, 189, 190 on the breakout and kept thinking I could be cute. And 202, I sold. And look where we are today, right? It's been like a straight line of, what is that, like 15%, a straight line. So on a big cap stock. So my point is, yeah, I think investors get paid because it'll happen all quickly. The question is, when does it all start? Probably need consecutive weak economic reports that also tell us it's Goldilocks and the economy is not falling apart. And when that happens, how it happens, not so sure.
Okay. So final question. So right now the Qs are up 18% year to date. SPYs are up 15%. What do you say to people who have been bearish and waiting for Armageddon? When they're seeing this, what do you tell those people?
Yeah, that I used to be this smart guy 20 years ago. And listen, the numbers don't add up. And the S&P's PE is historically at an extremely high spot. And you're seeing RSIs get up high and AI, although wonderful for NVIDIA and Broadcom, and a small section of AMD that has over $1 billion in revenue. Can it really carry the entire market? And the breadth is so narrow, blah, blah, blah. You know what I tell you? You missed out on such insane gains. Don't be smart. There'll be a moment where we top. And when we do, you'll know it, whether it's the VIX, whether it's a war, whether, God forbid, it's terrorist activity, whether or not there's like a top and we go through the lows from the prior day, real signals. In the meantime, the problem with all that is not even waiting to be right. It's what the hell you're missing on the upside. It took me a long time to figure that out. It's the opportunity cost on the upside. It's look what Amazon's done all year. It's look what NVIDIA's done all year. It's look at some of the size of these moves. Look what Tesla just did. So you can be that guy or girl, but the opportunity cost, you'll never make back when you're finally right unless the market crashes. That's what I tell you. You ain't making it. All you missed when we finally go down 10, 15, 20%, you're not missing what you missed on the upside.
Okay, David. So we have a quick question in the audience from Eric, and I'm bringing it up because I know this was a trade in the room today, but he's asking about Eli Lilly. There was that news today about politicians calling about they want lower prices on the GLP-1 drugs. I know Rick had a big call on it today, but what do you think about Lilly here?
I think first off, I said it was just about a week ago. Someone asked, I said, listen, that was a beautiful breakout through 800 to 900. I wouldn't be buying it up there. It could use a rest. You never know what the news is. Here's the news. a fellow that is very unlikely, like way unlikely to be president for very much longer, has now decided, that he'd like to lower prices. Is the immediate move to sell these stocks? Of course. Do I think it's more noise than serious news that should hurt the stock in the long term? No. But if it came at 800, it might mean a lot less. It's come after a massive breakout of 120, 130 points from bottom to top when it got over 800. And that's why it's affecting the stock. I can tell him, I know Rick got pretty aggressive buying calls. What was it down? 25, 30 points. I was so busy with other names, but it was down a lot, not just what it is now, which is 17. And I know Rick did phenomenally well on the turn, but he also realizes the stock's come far. Sorry, it wasn't quite 25, 30, but it was 20 and change. Anyhow, I know he did well, bought the dip, and I think he took profits on most. If you look, it bottomed, 878. So I'm right. Yeah, it was down almost 30 points. It bottomed exactly, like literally to the T, where it's supposed to. The 21 day, 876.71. It got to 878. So that's pretty darn close. So if I'm the fellow that just asked, and I know him, a nice fellow in Israel, I would look for that key level to hold because the 21 day matters. In fact, the stock has not been below the 21 day, Lilly, since below 800. So if it were to get below the 21 day, a la a stock like NVIDIA, you saw the downside once it did. This is another one of the biggest leaders of the past few years. Then Lilly's got some real downside, another 40, 50 points. So make sure that 21 day holds, which is 876s.
Okay, guys. That is going to wrap us up. I hope you really listen to David's wisdom today to not be so smart, because it will get you in trouble and it will leave you broke and angry at the end of the day. So we will be back next week. David, as always, a pleasure.
Thank you guys for joining. Have a great day and a holiday.